Good evening, ladies and gents. Welcome to another video brought to you by Total Control Traders. It's been a while since we've uploaded a video. For those of you that are not aware, we have shifted to a little bit more morning lives. So let me know how you feel about that. The turnout has been increasing and seems like some of you really enjoy the morning live call outs as well, Friday morning lottos and whatnot. So a couple things we're going to change up today's video a little bit. A few things I wanted to talk about. First is we now have the free memberships to our online trading Slack chat group with live updates as well as trade call outs. So make sure you check it out. The link will be down in the description. Also, 4 more days for the Black Friday sale on totalcontroltraders.com. Site-wide sale for 20% off. Make sure to use the code BF2021 for 20% off everything. If you don't know what you're getting into and you want to try it out first, join our free membership and you'll understand what it looks like, at least for the group, and as well as the call-outs that we do, what the results look like. All results since December 2020 has been posted on the website for you to look at. Now let's get into it. What I mean by we're going to change up today's video is we're going to be doing a quick recap. This by all means is not a bragging session, okay? Just to let you guys know what you could anticipate as you're joining our Slack trading chat group. Oh, that is a lot of lines. We'll fix that up. So before we get into the market, just wanted to show you guys a couple video recaps from what we had discussed on November 9th as well as the 10th. So let's get into it. This is November 9th video, and one thing we discussed was that weekly bear divergence as a warning. If we were to see a pullback from here, that could prove to be a very concerning chart or what's to come, because there is a weekly bear divergence now. If we were to pull back from here, so that's the weekly that we had discussed. Now let's take a look at what the weekly looks like on SPX. SPX, same as before. Essentially, it just dragged out for another 2 additional weeks from what we were looking at. Or is it 1 additional week? No, 1 additional week. So last week was the stall, and this week we saw that weekly bear divergence starting to play out. So this is now a very concerning chart. As mentioned in November 9th video, this is the first weekly bear divergence on SPX since the beginning of the pandemic run. Back here, there was no new high, so there is no bear divergence. Now let's take a look at the other. What is this green line? Why is this green line here? That's yeah, I don't think that's supposed to be there. Anyway, so let's take a look at the other video that I wanted to do a quick recap, which is the day after that we discussed about the potential weekly bear divergence, and that is on November 10th. Yeah, 1-to-1 extension target. So there is still a chance for that. Ultimately, I'm not seeing too much reason that we're rejecting from here, so there is that possibility that we can just reverse from here and get to new highs. Now we're gonna have to see what the RSI look like if that is the case, whether there's gonna be a daily bear divergence, but ultimately US dollars new. All right, so that's the discussion from November 10th, and that had talked about the daily bear divergence that's potential for reversal from November 10th. And if we were to look at the daily chart, November 10th did mark that bottom. We had to redraw this trend line as seeing on some videos afterwards. I can't remember when we actually redrew it, but regardless, we redrew the trend line, and it still works all the way back here. There's still multiple bounces and a rejection here, so lost that trend line, immediate back test, a rejection from here, and another resistance here, and we saw the bounce from that November 10th, the day the video came out. Okay, and from there we did see new high on the daily, forming that daily bear divergence. So this is a weekly that we had drawn, but if you were to move this and move this, you can see the weekly bear divergence on that new high. As for the daily, it'll be somewhere like that. So that is the daily bear divergence that we had talked about on top of that weekly bear divergence. So this is the pullback that we have been talking about. Regardless of the situation, you may say, okay, this is due to pandemic news, due to interest rate increasing, due to the Feds being a little bit more hawkish now on their interest rate. Doesn't matter. It does not matter what the news is. It does not matter what the cause for this move is. Ultimately, this is the move that we were looking for. As mentioned before, the reason why since starting to trade I do not look at charts anymore is because if the chart is gonna work one way, it will work one way regardless of the news, and it just so happens a lot of times the news are timed to come out at those times to reverse the charts. So if we're looking at this, daily bear divergence, weekly bear divergence, the chart is very concerning. Looking at today's price action, whoo, congrats bears. Congrats to those that follow the trade in the trading community. Congrats to those that follow the UVIX or whatever it's UVIX, SQQQ, whichever it is, SPY puts. There's a lot of plays that were called out, and majority of those paid. SOXS is another one. So looking at this chart, we did break that key price that we had talked about. There were two to break. One is on the top end is 4744.6. On the lower end, it was 4631.8. Now, if we're looking at this daily chart, we are closing near that low of day on huge bear volume as well. So the anticipation from here is that we will be seeing a lower high. A lower high on either the 4 hours or the 8 hours already is already in that oversold condition, so we should see a bounce coming Monday. Now, what I meant, personally, I'm not swinging too much bull positions, even though the hourly is already in the teens. The reason for that is I want to see whether if Monday is going to give us a gap down, and that will be one sexy chart for some bullish bounce plays on a lot of tickers, and we will focus on what tickers we'll be looking at. So Monday morning, make sure you tune in to our Monday morning live. There's going to be the first of its potential series. We'll decide what that looks like depending on what the turnout looks like for that Monday morning live. Monday morning live, I will emphasize this, is going to be one of the most important videos that you're going to want to watch, because it is going to determine what the bounce is going to look like. It's going to determine what tickers you should keep an eye on. And from today's morning video, in case you did not tune in, today's morning video, the top call out was Airbnb, followed by PTON was the second watch. And if we look at Airbnb as one of the very, very few charts that is green today, and we're looking at 4%, 4% run on increasing bull volume. What an amazing trade. This ended up being just about 140% ultimately, because I wanted to sell a little bit earlier. I didn't want to wait for the end of the day. But towards the end of the day, the trade turned out to be 300, near that 400. Actually, is a little bit over 400% trade. Amazing lotto. So make sure you tune in on Monday morning live. Same idea. It'll be a one exception kind of thing for potential Monday lottos. All right, so SPX, ultimately, where I'm thinking from here is we should be looking at further downside to come. As mentioned before, once this is confirmed, the daily bear divergence as well as that weekly bear divergence, the minimum we'll be looking at is this previous all-time high back test, and Monday morning, Monday we should be seeing somewhere around there. If not, it might take a lot longer actually based on the daily charts. There could be just a inside bar kind of day on Monday, but ultimately we will be looking at this back test. Now we did close below this key resistance and support as well, below this support as well. So all supports have been lost. Next up is previous all-time high. Let's clean this up a little bit. So we're not going to be looking at that anymore. That's not important. This one is a little bit more important. Resistance as well as support. 4,600. Closing below that near the low of day. Now let's take a look at NAS. NAS is a little bit stronger versus SPX, and it's the strongest. Yeah, it is. I wasn't sure. I haven't looked at Dow for quite some time, but it is the strongest of the 4 indexes. We have not lost that key support yet at 15,907. Once this is lost, we'll be looking down. Same idea, looking at this back test of the previous all-time high. Let's see, this seemed to be a better level because based on this previous all-time high, there is some resistances, a very minimal support. So anyways, regardless, the first key to lose would be that 15,907. Let's draw a fib on here, see if it lines up with anything. Would you look at that? So the key support is right around that, the first key support is right around that 0.382, and following that, the main area I'll be looking at is this previous resistance, support, rejection again, chopped around it, so around that 15,402, right around GP. Before then, there is also a previous all-time high at 15,710. Regardless, NAS is one of the strongest charts between the 4 indexes. Actually, it is the strongest chart. Now, RUS is the weakest of the 4 indexes, and based on this, this is a very interesting chart because it is a breakout fake out and coming straight back down. Huge bearish action. Now, based on the chart, we are bouncing from that previous key support resistance. Monday, I would anticipate if we're to see a gap down, there will be a lot of very nice, very sexy bounce potentials that are trading under the RUS. So Monday we should be focusing on either RUS or NAS, one of the two. NAS, it will be bullish play because it is the strongest. RUS, we'll have to see, we'll have to give it a little bit more time because we're gonna want to see that bullish action come in before entering bullish plays for bounce plays. Okay, and let's get into the market, see how the rest of the leading indicators look. So US did break over that upper trend line of the channel. We are coming back down a little bit, closing under that daily 8. No real concerns yet. Ultimately, the chart is still bullish, meaning the market is still looking bearish. Now let's take a look at US 10 years. Huge bear break today. You could call this a head and shoulders pattern, with the neckline being right here. So we did close just above the neckline. Once this is lost, I would anticipate further downside on US 10-year yield. Now, one thing I did notice as well, a chart that we have not looked at for quite some time while we're talking about bonds, the US 10-year over 2-year. For those of you that haven't seen the video from before, a long time, a while ago, we talked about how far it ran, how fast it ran comparing to all the previous times that it has ran from after a correction. So the last time that it ran after a correction, we can see that it was a 1,285% run over 232 trading weeks, versus this time that we ran was actually a little bit higher. 1,152% run over 57 trading weeks only. So when we talked about this last time, we talked about how this is very likely to come down hard. Okay, and the US 10-year over 2-year have been coming down very hard ever since we talked about it from all the way back here, and we're seeing very nice follow through as well. There is ultimately somewhat of a head and shoulders as well, with neckline being right here. So you can see multiple supports here and lost it. Depending on how you draw, you could call that immediate backtest and follow through on this now. Now, if we were to reach sub-zero again on US 10-year over 2-year, that will be a huge concern. Okay, generally market correction follows a year. I think is anywhere between a year to 2 years following this chart going sub-zero. So if you look at this, the last time it went sub-zero is August 2019, and within the year the market corrected, and that's when it bounced. March 2020 was February 2020 was the correction of the market. Now I don't really want to go back to the chart, but the same idea from back here. If you do refer to the SPX chart, within the year of this going sub-zero, which is January 2006, within 2 years, February, and we all know the 2008 correction. So same idea. So gonna start keeping an eye on this chart a little bit, but not too closely, just because if we're to go sub-zero, that is gonna be a concern. So that's US 10-year over 2-year. Next one is VIX. Look at VIX today. Holy! Congrats, bulls. Remember we talked about that daily bull divergence? Yeah. That daily bull divergence is playing out. 54% rise today, bullish action, 54%, closing near the high of day. You do not see this kind of candle too often on VIX. And if you look at it, closing near the high of day, not very often it closes near the high of day. Sorry, this is a weekly candle. So let's look at the daily candle. Not very often it closes near the high of day, but this is what I'll be expecting, somewhere, chopping around that new highs before a pullback. So it did take three quarters of my UVIXY position off at a huge profit. So from here, we'll be watching what the next few days price action looks like. If it's going to be chopping around such as these previous pops, then what we're going to be doing is taking the rest of it off. But huge profit so far. Amazing trade. Congrats to all the bears. Daily bull divergence from here, this low to this low, and we are seeing huge follow through on this wedge break. Next is gold. So on gold, trend line still holding. This is the last piece of puzzle, in my personal opinion. The last piece of puzzle, if we were to break bull on this closing over that 88, I would anticipate a break over this long-term upper trend line. That will be the huge concern for the market. If we do, I'm going to move this alert down a little bit to above today's high. So if it does break today's high coming next week, might enter a play here on gold. And hey, by the way, if you are looking to get live updates, whether if I enter bullish play on gold or any other tickers, that is what the free membership is for. Check out the link below in description. Anyway, so that's gold. Overall market concern is remaining extra high, as long as VIX is remaining up there, as long as SPX is remaining down here, and we're looking at a back test of the previous all-time high. Market, there's going to be some juicy plays coming up. But hey, one big warning is do not enter juicy plays without a confirmed potential reversal. You're going to want to see that bullish action on the shorter time frames before entering. Now, based on the SPX chart, that hourly 8 is the guide right now. You can see, even the beginning of this move, hourly 8 reject, hourly 8 reject again, unable to close over it, and then another rejection, huge follow through, okay, and then another couple rejections here, another rejection, one more rejection into the close. There was a decent dip buying near that close, that last 30 minutes of the market, but ultimately it is still a rejection on the hourly. All right, so that's my thought on the market. Hope you guys enjoy. Let's cover a few tickers. First one, always Tesla, still remaining strong. Like the chart. Now ABC, I'm thinking a little bit less and less likely on this ABC now, because when we look at the chart, B, yes, it corrected, it came back. We held GP, we are still relatively bullish, and low bear volume on today's chart. So Tesla will remain as one of the top watches for Monday's potential bounce play. I like the chart. I want to see, the most ideal entry, but hey, if the chart is strong, we're not gonna be going against it. Bounce to 0.786, holding GP. Ooh, looks amazing. Tesla is gonna be one of the top watches. Apple. Ooh. Okay, I did not see this. Apple, it is a previous all-time high backtest, immediate backtest after the breakout, but we lost at the 88. Ideally, we wanted to see a close above the 88 on Apple. So with this, I do think over the longer term, and by longer term, I don't mean, something like 2 year, 4 year, because those are always going to be bullish. But Apple, I do believe over the longer term, such as, a few months, should see new highs. The chart is still strong. We are still just setting a daily higher low. So best first entry will be around 153.17, where I have the alert marked. And next is Amazon. MTTR is the other hottest tickers. So MTTR Matterport. This is a very interesting chart. We are bull flagging right below that previous all-time high. We got to new all-time high, shut down a little bit, but the chart remains strong. We are still holding that 88, very slight close under it twice, but immediately bought up. So MTTR is going to be remaining on top watch, half a position right now. Let's see if there's a key zone here. Depending on how you want to draw it, I sort of like this a little bit better because there's no close above it. Let's see. So this is a must hold for me. If this is to be lost, that will be the exit on MTTR bullish play. Next one is LCID, Lucid, remaining bullish, daily bull flag again. Look at it. It's a decreasing volume overall. Amazing setup. Higher prices to come. Strong belief in this chart. Gap is already filled. New all-time high is going to be on the horizon once the market turns around. Okay. Lucid. Long-term play. No worries on it. All right, let's get into the requested tickers. First one is, did we not? Yeah, okay. First one is Amazon. So double fake out pattern still remaining in play. Double fake out, as long as this GP is not lost, there is no real concern on it. The shorter term wise, if we look at the daily, we did lose that 88. This is a slight red flag. From here, let's see, daily higher low. What must hold, the bulls must hold, is 34.47. This last daily higher low. As long as that holds, I will still keep the chart on top watch for re-entry into that new all-time high play. Next is Snap. Lots of inside bars. Aside from today, it was a double inside bar over Tuesday, Wednesday. And today is ultimately somewhat, depending on which one you compare it to, ultimately somewhat of an inside bar as well. So there will be a big move coming. But on this kind of chart, daily lower low, huge gap down, and continue selling, daily lower low, lower high, and then lower low again. On this kind of chart, I would rather play on the breakout of, the key resistance is around 51.66. And daily 8 is around there as well. So personally, if I were to play a reversal play on Snap, I'd be waiting for that break above daily 8. Right around where I have the alert set. Alert right now is setting at 51.07. but we're gonna have to watch for this chart. No rush into it. This is a daily bull divergence right now, but you're gonna need to see that follow through first. Right now it is relatively strong versus the market, so that means is a very great sign. Decreasing bull volume, however, that's a little bit concerning, and it is a daily bear flag right now, so do not play reversal until it is confirmed over at least some sort of middle ground. You know, the safest place is probably on the break above 57.14, the high over here. But I do believe if it were to break over this resistance of 51.66, we should see further upside to come, and that will see a confirmation of this daily bull divergence. Next one is QS. All right, QS is holding that GP so far. Volume's not looking so great. There's no bull divergence. This is a daily higher low so far. And remember, the thing I don't like about this chart is this trend line down here. So I can probably delete this one now. So this trend line down here, we have ran a bit too much on the way up. And this trend line is showing, let's see, does it line up with anything? 0.786. So we could continue to grind down sideways all the way over here, $27 kind of thing. But we're going to have to watch for whether this GP holds. So let's move this alert down a little bit. The key to break is going to be 32.40-ish, 32.30. If we're to break above that, holding this GP, there is a chance that we can see new highs, forming that daily bear divergence before coming back down. So QS, potentially a good bounce chart. I wouldn't really call it on top watch though. Next one is DCRC. Don't really like the chart. And let's just draw this out. Okay, so we are holding the trend line, the short-term trend line. New all-time high chart getting shut down. Oh, strong daily bear divergence. That is not looking good. Bulls must hold this trend line. Not really seeing much of a key zone. You could call it here. Resistance, support, support again, and then there is slight resistance over here as well as over here. The reason why I don't like this chart is if we were to lose the trend line, there's not a whole lot of support until all the way down here. And we'll draw it over here for now. And the other thing is, you know, based on experience, whenever I see a chart with key zone bigger on the top end versus smaller key zones on the bottom end, it generally means when it pulls back, it's going to pull back quite a bit. So it is trading at $12 right now. If we're to look at the downside, you know, 14% versus the upside, it's going to be about 14%. That's 50-50, and trend line will be the stop loss I would place. Probably below today's low. That's still a 5%. Risk to reward wise doesn't really make sense to me. Even if we're to go up, we're looking at maximum, you know, about 15%. This is a daily bear divergence. Downward is 5%. So that's 3-to-1 risk to reward while we're right at that RSI. So it doesn't really make sense. All right, so that's DCRC. Next one is give me one sec. 868. 859. Okay, so it might be worth discussing. FCEL. This is not a requested ticker, it's just something I'm looking at, and that's why I wanted to see whether it's going to be worth discussing. Today we did hold that GP, very key GP to hold. We're bouncing from the lower end of the GP. There is a indecision candle. We did hold that key support at the closing right on it. 893 key support, closing 894. Gonna need to see that reversal right away. So I would move the alert to the high of day today, in case this does reverse from here. Overall chart looks okay. This is still a daily higher low. right at GP. We're gonna need to hold that. So there is a potential for a play here. Not gonna be on top watch, however. Next one, let's quickly take a look at. For some reason, I think this chart is very hot, but I don't see why. I still don't see why. We looked at it a few times already too. So this, as mentioned, until this upper trend line breaks, there is no play on from a bullish perspective. So we will set in an alert on this trend line itself. Other than that, right, let's remove this one. Doesn't matter anymore on this one. Bullish. I want to say engulfing, but it's not really. Decreasing bull volume. Daily bear flag. Chart looks weak. Not gonna lie, the chart does look weak. So probably move this down a little bit here. See resistance, support, rejection, support. Yeah, so this still makes sense. Rejection, rejection. Yeah, this still makes sense too. Move this up a little bit. Yeah, that's better. So until this trend line breaks, no play on AVPT. All right, next one's a couple other ones I picked out to discuss. First one is Airbnb. We did play this today. What an amazing bounce play amid market bearishness. Huge gap down, increasing bull volume on the day, closing near the high of day. Chart looks great for continuation. Now the alternative after our lotto play was to roll it out for one week out, because there is a lot more room to move towards that 0.386. But the reason why I decided not to do it is the overall concern of the market potential gap down into Monday. So did not do that. The other way to do it is you could have picked up some commons on towards wherever you sold. But Airbnb remaining one of the top watches on into next week. This bearish divergence, in my opinion, has played out quite nicely, and we are oversold. We are extended on the, well, we're not oversold, but we're extended on the daily. We should be oversold on shorter time frames. Slight bullish divergence on the hourly. So nothing is too oversold. There can be a lot more downside to come on Airbnb. And if we were to look at the 30-minute chart, ultimately we are rejecting from that 30-minute 8. So slight concern on Airbnb, but we'll be keeping on top watch going into Monday for a potential bounce play. Next one is AMC. Really like where the chart is at for a longer time frame play. So there is a key trend line here, and got a notification today that we did break bear on it, and we saw dip buying coming in. This is a long-term wedge that we're playing off of, and this can, once, if we're to break this, if we're to hold this and see continuation into Monday, Tuesday, I would anticipate a break of this upper trend line. The alternative that you can play is just wait for the break of this upper trend line where we have set the alert for. And on that, so I did get a initial entry starter position into AMC. On the break of this upper trend line, we'll be looking to add on this trade. Really love where the chart is at and what the chart is looking like as a setup. Next one is PTON. So PTON was the alternative of the bounce play that we talked about today, but due to the gap up, we put that off to the side versus Airbnb. The gap up, and then off the beginning of the day, we saw selling pressure coming in. Ultimately, this is still a daily bull divergence potential, but we're going to need to see that follow through coming in Monday. Further upside, PTON remaining top watch next week. Oh, there's quite a few, hey? So let's see, PTON, Airbnb, Tesla. I don't really care for MTTR. Yeah, I would say those three are probably Amazon. Yeah, the rest is we just wait for notifications. But as for chart wise, the ones that I pulled up, I will have pulled up on Monday will be Airbnb, PTON, Tesla. Tesla's always on the charts. So yeah, those three. And what else we got? PTON MRNA. How can we forget? COVID plays. Hey, look at this. Okay, let me move this chart a little bit here so you guys can see. So this is my watch list. You know, there's a ton of tickers on there. You don't have to copy it over. But if you look at this, just a quick glance over the chart, you know, so much red. so much red aside from the VIX over here and VIX over there, you know, UVIX, VXX, whatever you're looking at. And look at the sector that's green. COVID plays. mRNA, PFE, Zoom, PTON, TDOG, all green. And it's not letting me drag it back out now. There we go. Yeah, so mRNA, we're going to have to cover this. Huge move today, 20%, and ultimately it was at 1.28%. Gap up, continuation. Ultimately, we filled that gap now. Depending on how you look at it. I don't like the chart in the sense that there's now a huge gap left behind. So coming Monday, Tuesday, we could see, if there's a balance in the market, we could see a pullback to fill this gap now and before a next leg move up. But mRNA, I like the chart. I don't know if I like where it's bouncing from. Okay, so there is now a key zone here. And the reason why I say now is because we back tested it now. So you can draw this smaller or bigger depending on how you like it, but I do this is a bit too small for my liking, but it does make a lot more sense that there is resistance here, became support, gap down, immediately bought up as a support again. So if we look at this, it does make sense because gap sold off, immediately bought up. So that's going to be a very key zone to be keeping an eye on. As for the next zone down, multiple supports here. Some sort of price action around that 293.62. Let's see if we can draw this into a zone instead. I do see something. Oh, what I don't like is a bigger zone on top though. Yes, that would make sense. Yeah, I would draw it down here. It's still bigger on top. Yeah, it's still a bigger zone on top. So that is a little bit concerning. You know, this kind of chart generally means when it goes down, it will go down for quite some time. So ultimately, we did not make daily higher high yet. The daily higher high to break is 356.77. Until that is broken, there is no confirmed bullish play on here. But there is. Let's draw this smaller actually. Yeah, this might make sense. Okay, so there is this. Let's watch for that gap fill. It's gonna be around that key zone. There is another gap above. This is actually pretty nice over here. Yeah, so there is a key zone above as well. Where to draw it? Just very tight. Multiple supports, multiple resistances, gap fill. Okay, so there is a play in here. What you could be looking at is Monday, Tuesday, gap fill, back test this trend line before a next leg move up to fill that other gap, double gap fill. Hey, it's looking kind of sexy. Let's set an alert on this. Where are we gonna set it? Let's set it on this trend line. And then we will set it on above today's high. There is a resistance somewhere around there to 350. So a wedge alert. Okay, on this trend line as well as right here. It breaks either way, there might be a play there. So that's Moderna. Next one, last one we're gonna be discussing today is Pfizer. Pfizer, huge gap up. Unable to see continuation. Blue skies indecision candle with decent volume. Now this is a meh chart. I would say, in the sense that we could be seeing. See, we're to see sell-off continuation. There could be a cup and handle play here, and as we know, what cup and handle generally turns out to look like is Soundcore is currently in cup handle. What's another one? I can't remember what other chart that we came across today or a few days ago that there is cup handle that confirmed. Anyways, so cup handle is a bullish pattern on here. Let's see if we get that handle. Something like that. But based on today's candle, based on today's price action and volume, I would anticipate some sort of a stall or filling this gap. Same idea as Moderna. All right, so that's it for today's video. Hey, make sure you check out our website. Black Friday sale, 20% site-wide. Make sure to use the code BF2021 to receive 20% off everything. As well, hey, the biggest thing, free membership. Free membership to our online trading community just opened up. First enrollment period limited to 20 individuals. Make sure you check it out. Join before the number is used up. All right. Thank you guys for watching. I will see you guys in the next video.